All right, Forex traders, let's get the show on the road. I hope you had a fantastic weekend. I hope you did all right on non-farm payrolls. 700 Forex traders registered to attend that webinar on Friday. Pretty nice. So my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. As you know, we do these sessions every single day, 7:30 in the morning, Monday through Friday here at TradersWay. Sorry, Monday through Thursday here at TradersWay, and every Friday at fxstreet.com. Every day, once I'm done the video or finished with the webinar, I immediately upload the video to youtube.com/c/TradersWay. So give it a view, give it a like, give it a share. Today is Monday. We typically do fundamental analysis. We'll do the commitment of traders report and so on and so forth. So should be a nice easy event today. Plan things out, right? There's, you should always make time to sharpen your saw. So let's do that today. Let's get going. All right, remember, trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, does not predict future results. So stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Cool. Alrighty then. Yeah, we'll start with well, let's start with this. I have this trade open. Look how lucky I got last night. OMG. I placed the trade on this red candle and went to bed. Look at that. What a lucky boy I am. Can you guys see the trade? Or do I need to tell you? Well, I'll tell you. Okay. Big old drop. Lower high. This was non-farm payrolls high. I found it down here, lower low. So what do I want to do with it? I take the previous level of support, I drag it over, it becomes the future level of resistance. I put a working order. Right on there, it just happens to be 111.90, I believe. Not quite 112. The stop was 60 pips away. I just wanted it above the weekly central, and I went to bed. And the target is down here. I can't remember what I made. 110. I guess it's 110, just something like that. Short at 112, target 110, stop in place. Then, obviously, New York is going to be important to this. I want to stay below the 21. Okay? So I can drag my stop a little closer if I want to, and I'd like to not make it actually break even though when I say to break even, I always move it to like -1 or something. Why is the target there? It's more than enough. There's also a monthly pivot point, weekly reversal. Okay? So everybody knows, right? If M3 is the top, which I'm going to count it as the top, the bottom is M1. So I'm in just below it, and I'll get out just before it. But, honestly, I'm just going to watch the price action as we go down, and if the velocity is faster, then I'll stay in it longer. I'll just move I'll move my limit, I mean. And then why do I have a stop at -1 and not +1? Lots of traders love to do that. Oh, lock in 1 pip. They feel so good. What's wrong with that? Yeah, that's right. If I'm trying to actually figure out, when I review my statistics, I want to figure out which trade plans went successfully and which ones didn't. And by jamming it at +1, what am I doing to my average winner? My average winner gets smaller, right? But what happens to my losers then? What happens to the average loser? They're all up because I don't have any small losses, I only have big losses. And none of my wins are big, I only have small wins. So statistically, if I showed my trading performance to a potential investor, and I say, look, I have some big losses, but a whole bunch of little wins. How do you think that would present to somebody? I have a whole bunch of small wins and they're pretty good, but when I lose big. Is there, do you think on the long run there could be built-in risk in there? See, you don't know really, but it is a red flag. And what it says is I'm going to need to do some more due diligence to figure this guy out if I was the investor. Okay, well, you know, it's not necessarily whether your looks professional or not, but it's risk, because you're like, well, I find it difficult to sleep at night if I think you might have suddenly out of the blue a big loss will come out, right? I'd like to know you never have big losses. It's more ideal, right? And that you want the winners to pay for your losses, not your return on investment has to do with if your particular period has a big loss in it or not, right? You don't want your ROI to come down to when those big unknown big losses are going to hit versus just steady wins, right? So really the other way around, what you want to do is if it's a losing trade, and I think break-even trade to me is a losing trade, record it as a loss so that you know your statistics. I don't care about 99% winners. Right? Oh, 99% of the time my trades are winners. It's irrelevant. So anyways, I'll record it as a loss, and that's cool. But then when you look at the averages, I don't have any small wins. I only have big wins. But, you know, not big. I mean, some are 40, some are 400. Okay, but I don't want like 2 pip winners. You know, messing up my thing, because I didn't plan to have a 2 pip winner. Did you? Now, a small loss when it's like -1 and that gets recorded, I say, oh, well, it's a break-even trade. I moved my stop. Is moving your stop a good thing or a bad thing? Well, now it stands out if I have a high percentage of these break-even trades recorded as a loss, then I know there's a risk management issue or potentially a trade entry issue. But I know what it is. Do you understand the logic? Now I know what that part of my trading is, and I can decide whether that needs to be addressed or not. Okay, you don't want 80% break evens, right? So you have to figure out, well, is it my entry or is it my risk management? And then you can go figure it out. If you're not recording it properly in your trade journal, maybe you just don't even, you don't have that stat, right? And then losers are losers. And your losers generally should, you know, they should be moderate. You shouldn't have lots of little losses. What's your problem, boy? You scared about losing a little money, right? If you're going to lose, have a decent size loss. By decent, I don't know. I mean, it's, you know, I'd rather see you have a few 50 pip losses than a whole bunch of 12 pip losses. 12? I mean, come on. You're not that experienced. Your entries are not that good. Your fundamentals are a mess, right? And all your trade entries are going to have the accuracy of like a 12 pip entry. Please, come on. So cut your lot size in half and double your stop. So like I said, look, if you lost, let's say 50 pips and you sold at support, sorry, I mean, you sold at resistance or you bought at support and you lost 50 pips, what happened? Did you get unlucky or were you just simply wrong? No, you were wrong. That's what I want to know. I want to take the luck factor out of it. That's where you do, you know, if you're doing, you know, analysis of a trader, that's where you look at your Sharpe ratios and Sorrentino ratios, your risk-adjusted performance analysis and all that kind of stuff, because you're trying to figure out where the luck is, because lucky can be good, lucky can be bad. So what I'm saying is, if you sell at resistance, and in a bearish market, that's a reasonable trade plan in my humble opinion, okay? But if the market reversed and you just didn't catch it or you missed a piece of news or whatever, you're wrong. It breaks resistance, goes to the next level, and you should get out of the trade because you're wrong, but there's nothing lucky or unlucky about it. Yeah, Control C, Control V, Eric. That should work. We'll try it. All right, so you know, this information is important when you're. You know what? I thought it did. You know, honestly, yeah, apparently not. It's so funny. I thought you could. Well, guess not. Too bad. Control and then drag. I know I've done it. Ah, look at that. Sweet. That's the power of community, folks. Thank you, guys. You get that? Control and then click it. Yeah. See, that's exactly why we meet together every single day as a community. That's cool. The power of many. All right. So, anyways, yeah. So if you're wrong and you make a good trade and it fails, hey, you're wrong. You shouldn't be wrong that often, right? It happens. You know, you missed the higher high for some reason, or you were just too aggressive, or you shouldn't be wrong that long or that much. I mean, it's fairly straightforward. It's sell lower high, right? Right? But every once in a while, you know, something unexpected happens. You take a loss, but now it's recorded. You're wrong. You gave yourself enough room to breathe. There wasn't luck. You didn't get knocked out of some price action and some jumpiness in the market and whatever. You had lots of room to breathe. The you know, the luck bleeds out. And look, if it's a bearish trend and you sold at resistance, the vast majority of the time, you're likely to make at least some money. Unless you're completely wrong, the market reverses on you. Good. Take the loss. MoveOn.com, right? But it shouldn't be a huge statistic, right? You shouldn't be 70% of the time. Well, then you got an entry issue, right? Okay? So that's what that's all about, guys. All right. Not sure how we got on that, but it was fun. It was real. Wish, right? All right. Let's do a COT, yeah? Yeah, if you're having a bloodbath day, you just stop trading. Because that's what's happened. One thing that I do, if it's a particularly bad day, not only did you lose money, but you made a bunch of mistakes and you know it. Has anyone had a day like that recently? Is anyone willing to admit that, where not only did they lose money, which happens, but did you make a bunch of mistakes and you just know it? Yeah. And I haven't, luckily, I haven't had one of those days in a very long time, but I remember the last day it happened. It's one of those things. And when it was done, I stopped. First of all, I do have enough experience having bad days where eventually I just stopped. And I remember I threw myself back in my chair and I just couldn't believe it happened. Like, I remember, like, I had watched a horror movie, except I was in it and it was real. And I was like, a third person thing. Like, I just sat back and I'm like, what the hell was that? I just couldn't believe I just did all of that. And I'm like, that must have been the three most common mistakes that amateurs make, except I'm not supposed to be making them. And like, I swear to you, in about, it just, what happened was, you make a bad mistake and then you follow that up with a bad mistake and then mistake in exponentially faster, periods of time. And then, wow. So anyways, I made some just horrendous emotional or reactive or desperate moves. And this was in a time when you could lose a lot of money pretty quickly. And I think this was probably 2007, 2008. And anyway, so I was clean with myself and with the community I was trading with. I told everybody. This is at FX Boot Camp. I told everybody I just went through this horrendous trading day, and I lost a lot of money. And the problem, however, was I made every mistake under the sun. Stuff that is just amateur hour, and I'm willing to admit it. And then here's what my plan was. I said, I've lost confidence, because how could I possibly be confident if those ghosts just showed up? I thought I had buried those skeletons a long time ago, but they appeared, right? Boom, they're just out of nowhere. They showed up at my door, and I'm just trading like it's my first year. So I told everybody, I've lost some confidence, and here's what I'm going to do for the next week or two or whatever it takes. I'm going to do nothing but build confidence, and I'm going to do nothing but take lots of little winning trades. I'm just going to rack up dozens and dozens of small wins. I'm not in it for the money. I don't care about the pips. I don't care if the trade was worth 400 pips. I'm taking 25, and then I'm doing another one. Pick up another 25, and another, and another, and another, and another, and another, and another, and another. That's all I did, just over and over. And just over the period of time, made up a significant amount of the losses, and obviously then all of them. But I had, the money wasn't the issue. It was the confidence. And that's what I focused on for quite a while, and I threw down like 100 profitable trades or something in a very short order, only so that I could build confidence, that I can maintain control and focus and discipline, and I rebuilt from there. So if you've had a bad day and you know you made mistakes, stop trading. Don't even think about it. Don't try to win it back. Okay, that's what a loser would do. We know that, right? Right? I mean, just think about it. What would a loser do? A loser would try to make the money back. But the issue is not the money. Okay? So just stop trading altogether. You did it, you lost it, don't worry about it. What you should worry about is what I was worried about, to reconfirm to yourself that you are a patient, disciplined, skilled trader, and that you have to earn your way back into that confidence, because the confidence is your wealth. your money is just money. Your confidence builds wealth, doesn't it? Right? So yeah, if you have to do it on a demo account, I'm good with that. It's the same thing though. Worry about the confidence, don't worry about the money. And then identify the mistakes you made. Don't be ashamed of them. Write them down on a big piece of paper, paste them on your wall. If you're ashamed of it, you're going to bury it away somewhere in your brain and forget it, because you don't want to look at it, so you're going to ignore it, and you will be doomed to repeat. So instead of being ashamed of it, embrace it. Write it down. What are your 3 biggest mistakes? And tell your friends, tell your loved ones. Put it on the wall. Take out an ad, an ad campaign on Google. And tell the whole world, I suck at this, I suck at this, and I suck at that even more. But I'm working on it to improve. You get my point? Put it out in the daylight. That's what I did, right? What did I do? I told my community of people that I was teaching how to trade Forex profitably. They were paying money for that service, hundreds of dollars a month. And then I'm trading like an amateur. So was it stupid for me to tell everybody I just made a bunch of amateur mistakes? That I'm just going to go back to like Forex trading 101? Should I have been, should I be ashamed of it? Well, they helped me through, and that's why a community is important. So that's why you have this at TradersWay now. You're not trading alone, and I've been around, and I've had some big wins, and I've had some big losses. In my book, I talk about being the battle-scarred, non-commissioned officer. This guy with scars all over him, just looks like hell. But if you stay close to him, you'll stay alive. Because he's got scars to prove it that he's a survivor, right? Yeah, that's a good point, Zeal. So anyways, the most important thing once you got some basic skills is confidence. It's very difficult to be a consistently profitable trader and yet have no confidence. So I was more interested in rebuilding the confidence. Okay? Supremely important. Prove I can do it, and I can do it right. All right, so yeah, let's do some COT. But thank you for that, and I hope that was helpful. I don't even remember who asked the question now, but boy, that was we covered a lot, right? Analyzing your own trading statistics by capturing the truth in your trading. That was a big deal. That's important. Just even tracking your stats was, right? And then how to recover from a losing period. That's important. So yeah, that's a good open to the week, I think. So thank you for that. Okay, let's go through the COT, the Commitment of Traders Report, and this is this represents large institutional positions in the market. This is actually money in the market. It's not opinion. And the positions are large enough that it's required to be reported to the government, specifically to the Commodities Futures Trading Commission, or the CFTC. This data is actually available free to anybody with an internet connection. You can get it at the CFTC.gov website, I think. Yeah. Something like that. You have to Google it. But so anyways, this is what you download from the CFTC's site is spreadsheet. Okay, you just get a big old spreadsheet, and it's a bunch of numbers, and so what we go through here is a graphical version of specifically this non-hedging positions, but there are other market participants and their data is in that too, and it's fairly complicated. So this is the nice simple squiggly line version of it. Okay. All right, so in the euro, what do we have here? Euro USD, the price has gone up over the period of time. Remember, this is as of Tuesday last week, so Wednesday morning. The gray line, okay, that's long positions. Did traders go long euro last week? Right? Did they go long last week? What about the week before? Or the week before that, or the week before that, or the week before that? We're just looking now at the long positions. The answer is no. So for the last month, as the Euro USD has been going up, I've been telling you it's not a change in trend, it's a retracement. So look for resistance and look for reversal patterns at resistance. And at some point, based on the information we have now, which could change, eventually the trend will resume down. The trend is down. As you can see, this is the price of the Euro USD, this thing here. Okay. The trend is down, but in the last month it's been up. But the news to use is that I'm still looking to sell. Why? Because I don't see any market participants buying. Nobody's buying, guys. Nobody is buying. Nobody's buying. So this move up, which was dramatic, like close to 1,000 pips, is just the market was too heavily net short, and they were taking profit or getting knocked out because they traded late. So it is retracing, but it technically hasn't reversed based on, well, I guess fundamentally it hasn't reversed based on this data. So I've been pretty firm on that. And as of Tuesday, you can still see it's straight up, right? Right? This red line here is priced straight up. Trying to get, it's missing a little data here. Come on. Trying to get the price in there. Hello. Yeah, it's fighting me on it. So anyways, it's been straight up, right? So what's the trade plan? Look for resistance, look for reversal patterns at resistance. Okay. Anything going on here? Retracement, extension, retracement, fail, lower low, lower high, short. Did I short the top one? No. How would I know? Did I short the one after? Well, it was a great trade, except it was non-farm payrolls. Okay, and it hadn't really been confirmed, because if it had continued up, we would have just counted this as a long off of that area, right? Right? We would have said, oh well, it's bouncing here, right? If and it could certainly have gone up here, and we'd just say, oh well, it kicked off that. Okay, fine. Oh, that's fine. But now it's made a lower low. Now we're down here. And for me, it's Sunday night, about 11 o'clock at night. We're down here. It's made a lower low. Yay! Do I sell? WWWD, what would Wayne do? No! I don't sell red candles. Yeah, okay, sell at retrace. Well, we got to, we got to be particular about our communication, right? There's no room for miscommunication. No, no, don't be sorry. Be accurate. Right? So, like a dirty dog, right? Like a dirty dog, I sold it here and got it within 2 pips, I think. But don't cry for me, Argentina, right? I sometimes I go through periods where I remember for like, sometimes it's a month. I don't know if you guys have gone through this. I've gone through serious periods of time where when I use limit orders to get in, and for me, London opens right in the middle of the night, so it's very difficult, right? So very often I use limit orders, and I've gone through like my metrics by like 2 pips, right? Just not put in the trade, but if it would have gone 2 pips more, I'd be in the trade and I'd be up 100 pips for the day. Instead, I just got like working orders sitting in the market doing nothing. So yeah, it happens. But in this one, somehow, some way, I got lucky in a good way. Okay, but that's the logic. The point that I'm trying to make, because don't worry, I'm wrong too, right? Don't worry about that. The point is, it's the message that we've been discussing for a month. The EURUSD is up 1,000 pips, but according to this data, it should come down again. So when are you going to get it? So that's how I put it together fundamentally and technically. Okay, cool beans. Anybody feel ticklish inside? This makes you giddy. Makes me giddy. So yeah, we'll see where it goes from there. But ideally, this sets up a long-term move, right? I'm hoping this goes to parity. It's early. There's nothing to confirm that, but it has the potential. Okay? Probably not, but it could. Okay? Next. This pound, I think we should not spend too much time on. Why? Justina says it depends on the Fed. Well, it depends on when market participants think the Fed will act, not necessarily the Fed. Okay. Yeah, the reason I'm going to skip over the British pound is it doesn't have the UK elections built into this data, and I think it's probably important. Probably not on the long run, but I would like to have it included in that data set. Okay, but I'll tell you historically what seems to happen is uncertainty creates risk. Okay, uncertainty creates risk, and risk creates, let's say, a bearish move in the currency. Okay, so David Cameron comes back for the round of leading the United. Is that right? So people have an idea of his leadership and what his government would do. They can plan on it. So that's less risk And there's no reason why the pound couldn't go up, right? The results shouldn't impact the pound negatively. Okay? That doesn't necessarily mean up. It just there's no reason why the election out should negatively impact the British pound. If the British pound wants to come down for some other reason, oh, it will. It just won't be the election results. Make sense? It's just a function of risk, guys. A lot less risky. Now imagine you had to have a new leader that would bring in an entirely new cabinet. How are they going to behave in the future? If something goes wrong in the Middle East, how is the UK going to respond? Are they going to buddy up with the US? Are they not going to buddy up with the US? I mean, you wouldn't know, and you have to go through this whole period of, well, we don't really know what these guys are going to do. Okay? But you have a track record now based on how Cameron would respond. So you're like, okay, well, less risk. Good. Fine. That's all the market cares about. Okay? Yen yen. It's time. All right. Ooh, snap. What is going on here? Does this look at this period here and then look over week. That's dramatic. Don't you stink? A little too dramatic. Yeah. So what is going on? Long positions are gray, right? Down, 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 down. Okay, those are long positions. Long positions have been falling. Short positions, let's see, have been falling, have been falling. Spike! OMG. More shorts, less longs. How do you interpret this? If I gave you a $100,000 trading account and I said, trade, what does this mean to you? What would you possibly look for? Okay, well, at least, how about this? At least potentially over the next week, if things maintain the same, which they may or may not, but this week, you might look for dips in which you might buy. So you could say, this week, based on the commitment of traders report, you could consider buying dips in the USD yen. Because remember, this is priced in dollars, right? So it's basically, it is the USD yen, really. So you could say, I'm going to buy dips. We don't have a clear trend, but that is a significant move to have less bulls and more bears. So you simply, on retracements of the USD yen, you look to buy at support when price is oversold and you see some sort of technical reversal on a small time frame. Hey, Buzzy. I'll put the video on YouTube for you, all right? And as a reminder, guys, some of you guys are doing a fantastic job of actually documenting what you learned, what your takeaway was from the video. Could more of you do that? Just document what your takeaway was. What does that take? 30 seconds? Buzzy got 600 pips on NFP because of me. Right on, Buzzy. Yeah, well, I like Cohiba Bay hikes. Yep. They're a nice Cuban cigar. Monte Cristo #2, can't go wrong with that. So anyway, so yeah, that could be buy dips. Oops, I guess a dip would look like that. Buy dips, export with some sort of reversal pattern on a small time frame, and let her go. That's what it means to me. Cool. I'm glad you guys are learning. I mean, it's why I'm here. Just bear in mind, you know, TradersWay is making an investment of time and money and resources and energy to provide this help to you. And what's in it for them? They're hoping for two things. One, you fund a live account with real money. And two, that I help you become a successful Forex trader so that you trade successfully and profitably at TradersWay for many years to come. That's just common sense, common business sense, right? So I want you to think about that. They're doing this for you up front, hoping to build a long-term profitable relationship with you. So pay it back if you can. All right, so let's do the next. By the way, do they do binary demo? No. No demo on the binary as far as I know. But you can make $5 trades. I mean, like, it's pretty affordable. Although that's scalping. I prefer a little more than that, but all right, so let's do Aussie. Aussie is an interesting place here, right? At least I've found it interesting. Short positions. Whoa. Kind of seems down. Long positions. No change. Well, I mean, there's a tiny change, but what do you want to do? Why buy it? No one else is buying it. According to this, as of Tuesday of last week, professional, hedge funds, which are funny because hedge funds don't hedge, right? Okay. So all this says is there's potential at some point it's going to probably roll over and head back down for a while. Because nobody on the planet's buying. So as soon as people are getting out see, what they're doing is they're getting out of their shorts, which is not the same as going long. So what if people start adding shorts again? Now, why would they do that? What would possibly trigger that? Yeah, Ken, next week. Good point, Ken. Yeah, I was thinking more technically than fundamentally. Giant psychological level. Like, how about 80.00? Okay. That's what would probably do it. That's what I would look for. Remember, there's lots of different techniques for trading, but everybody sees a psychological level. They might not see the pivot, they might not see the fib, they might not see a lot of things. But even if you have a naked chart, you're going to see 80. So let's put it this way, 80 yields this spot right here. Okay, let's do it this way. That's the 80 zone. Okay, okay. Put it on a 4-hour chart, and it's important. Okay, there's a little bit of poetic license in that, but yeah, it's plausible. Okay, people just sell again at 80. Remember, according to the stats we saw, nobody's been buying. Nobody has been buying. According to the stats that we have, nobody is buying. They're just no longer selling. Trying to make a point, and it's simple, but it's not simple at the same time, right? Nobody is buying the Aussie dollar according to our statistics. Well, certainly not professional non-hedging currency traders. Nobody's buying, even though it's going up. So maybe you look to sell somewhere. What do you need to sell? How about a reversal pattern like a 1, 2, 3? Well, maybe that's what this giant thing is. Is this it? Test of 80, down. Notice the size of the high, 786, which predicts a lower high or double top. Comes up to 80 again, and does this now. We've got NFP and a bunch of RBA stuff and so on and so forth. So, you know, I'm not making the trade decision for you. You know, but it seems to me we could be at sort of a top of a range. How about that? And that we've had a couple of tries to make higher highs, right? What should they hire? If this was bullish, what would the price action look like? You'd buy it off the bottom. You'd make a higher high. Oh, hammock. Am I training you yet? When I yell hammock, you know what to do, right? Down. Boom, just like you thought. Yeah. Now, if you were going to hammock that, because now that's a higher high, you need a Fibonacci retracement. What's the sweet spot? Somewhere between the 382 and 618 Fibonacci retracement, which is in here. Okay, we dipped just slightly below that. Okay, which is fine. But a 618 predicts what? No. 618 predicts 1382. So this move here, the higher high, which is fine. Higher high means bull. 618, roll reversal, predicts 1382. But what happened? Not that. So we got attention, okay? It might be doing that. Now, you'd have to have fundamentals behind that. You would have to say, I want the Aussie dollar to weaken, and I want the US dollar to strengthen. Yeah, the 0 and the 100 is just useless to me, Eric. Completely useless. Just too many lines. I got enough lines in my life as it is, right? But, you know, I can tell where the 0 and 100 is because I got the nice orange line. I just don't need another one. So anyways, what if you did this now? You never close your eyes. Let's try to get rid of there. How about that? How about that? My mama told me when I was young, shut your mouth, boy. All right. So, anyways, that's the thought. If you were looking to be a bear, oops, that's what you'd be looking at. There's no way you wouldn't see that. Okay. But you have to already be a bear. And that's been my message for a very long time, hasn't it? I think if you attended my NFP event on Friday, um, you would remember part of that message. So if you're already a bear, you've already made that decision, then this has to be appealing to you. Does it mean it's going to come down? No. Okay, but now if you're going to trade it like a wedge, what you want is a break as close as to the apex as possible. And if it did, you can trust it. Okay? If a breaker or here, the potential for a fake out versus breakout is higher. Okay? But if you're a bear, you could, let's say, if you got a good trade, right? Let's say you were in, your stop could be here or just above here, and you're set, and you can just let it go for a long time. Okay? Be a simple kind of man. Okay? All right, so kiwi. Kiwi, 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 can't you see? Let's do the longs. What's the trend in longs? Okay? And then how about week over week? Did the open positions increase or decrease? Okay, well, that's good. So the market has some bulls in it. Okay. How about the bears? Over this roughly the same period, have bears been going up? Let's clean this up. Over that same period, now we're looking at the orange or yellowish orangish line. The number of shorts decrease. So what does it mean to the up move? That's reasonably believable. So you could say, I want to buy dips. Right? You could This is the end of the week. Write it down on a piece of paper. But that's what your strategy is going to be. You don't know where you're going to buy, but you're thinking of buying. Then on a daily chart, let's say, identify 3 places you'd be interested in buying if price dropped to one of those levels. And then if price does dip to one of those levels, drop from a daily chart to an hour or a 15-minute chart, and wait for those charts now to be, we want this one to go up, right? So wait for the 15-minute or the 1 hour to be rolled over and maybe oscillators turning north. Then you drop into a 5-minute chart and you look for, in that scenario now, the price goes zip, 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 and gives you a 1, 2, 3 at the place you identified as a good place to buy a day or two ago. And you're like, wow, if it reverses here, I'm going to buy it. And then on the 15-minute chart, you see it's way oversold, can't possibly fall any farther. And then on a 5-minute chart, it gives you a reversal pattern. What you going to do? What you going to do? Got a pocket full of pips, and my homeboys do too. Okay. And I guess what's left? Kitty cat. Says neutral, huh? Nobody's buying, but less people are selling. Cautious. Caution, caution. Just be careful. Says sideways. All right. Who's going to be here tomorrow to do a solid technical analysis? I have a request for a pivot point lesson. I'm happy to do that since you're the boss and I'm just a simple currency trader. Your whim is my command. One thing I think we should do that we haven't done for a while, maybe not tomorrow, but maybe Wednesday or something, do a bunch of binary options trading. We had some questions a few weeks ago about binary options, so I taught you how to scalp with binary options. I taught you how to hedge with binary options. And then one day in a 45-minute period, I made, what, 6 scalps? And they were all profitable. Lucky, I suppose, huh? Sort of like Ricky Fowler playing the 17th on Sawgrass. He had to play it 6 times over the course of the tournament, and 5 of them were birdied, and 2 of his shots were within 5 feet. That's pretty lucky. That's pretty lucky, because other people hit the center of the green and the ball goes in the water. So how do you land it right next to the pin and it stops? And then you do it again. Yeah. Amazing. Hey, I love you, babe, but I got to jump. See you on the flip side. See you tomorrow. I'm going to drop you on youtube.com on our TradersWay channel. Please look at yesterday's video or our last video. Leave a comment, leave a like, do something, okay? And I will upload this video to YouTube. It should be ready for you within the hour. Okay? So again, peace on earth. May the pips be with you. May your profits be above average. And I'm glad you're learning things, and I'm glad that some of you are starting to find some real success. That's the whole reason. And I love achieving the mission. Cheers.